This indicator right here could potentially give us a signal as to when the Bitcoin price could top in the short term. Hello everyone, my name is J1 General and welcome back to my YouTube channel. In today's video we will be discussing how the Federal Reserve's interest rates could be a leading factor as to when the Bitcoin price could top in the near short term. Now this video today will be by extension following on from my last video. So if you haven't checked my last video, make sure you go watch that, because in that video I discussed how two narratives could give us that push to that elusive 48k level. Those two narratives could be the Bitcoin spot ETF or the Bitcoin halving. So make sure you go watch that before you watch this one, because this video would make a lot more sense. Now in today's video guys, before we actually get into the video, if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop for some cryptocurrency products. Anything from a digital ticker to show you cryptocurrency's live prices, coins, t-shirts, accessories, jewelry and all that good stuff. I have a tool. So if you are a fan of crypto, go ahead. I'll leave a link in the description down below and you can shop some nice cryptocurrency products. Anyways, without further ado, let's begin with the video. So the Federal Reserve's interest rates. We currently sit at 5.5%, and this is the American government. The reason why we look at the American government's interest rates is because they probably hold the most power in terms of how we can use that data to navigate markets. We are currently at 5.5%, which is quite high considering we haven't been at those levels in quite some time. Now with cryptocurrency, we know that it hasn't been around for a long time. Cryptocurrency has probably been around, well, has been around, not probably, it has been around since 2009 when Bitcoin was first created. Now as you can see on the chart, we don't have many data points with regards to cryptocurrency. So we're going to look at the S&P 500 after we look at Bitcoin, because the S&P 500 is slightly positively correlated with Bitcoin, as they are both risk on assets. So since Bitcoin was created, you can see that the Fed funds rates were practically zero up until 2016, before the Fed started to raise rates, paused, cut, and then it was back down to zero. Many people argued that it is the low interest rates which is what has caused Bitcoin's price to surge in such a short amount of time, because when the Fed funds rates are low, cash is liquid, cash is free, you know, cash is cheap. Everyone's loaning, everyone's getting cheap cash, and where better to put your money than risk on assets if cash is cheap. So that's just the logic behind that. But with regards to this video, with regards to the interest rates, let's look at the last time where the Bitcoin price was where we are with regards to the interest rates. So if we take a look at the charts here guys, you can see now that the Fed has paused for a significant amount of time, and we can see that the last time that the Fed have done that was in 2019. So with regards to Bitcoin, and I can speak only once because this only happened once before. It doesn't mean that it will happen again. Just bear that in mind. It doesn't mean it can happen again, as we only have one data point, but this is the only thing we can go off, right? So I'm just going to show you guys, because I feel like it's the only right thing to do so. So we're coming up on a pause right now. A lot of people are expecting another pause in the next FOMC meeting in January. The meeting after that is in March. Now, we'll get on to March of next year very soon, but just quickly, if we see in 2019, Bitcoin actually topped out when the federal funds actually cut for the first time. So in June of 2019, the Federal Reserve actually cut for the first time, which marked the Bitcoin top in 2019. So with that being said, the first rate cut is expected to be in March. Now, how do I know that? We can use a tool right here, which is on the CME Group website, which just gets all of the market analysis and gets all predictions and just puts them into one. You got people who think we're going to have crazy rate cuts and people who think we're going to have crazy rate hikes. puts all of those analysis tools together, and we get something like this, the CME Fed Watch Tool, which marks the probabilities of the next meeting's decision to either hike rates, pause rates, or cut rates. So, as you can see, as I mentioned previously, the next FOMC meeting is the 31st of January, yeah? And you can see that there is a 83.5% probability that the Fed pauses again, yeah? So the Fed is likely to pause again. Now these numbers can change at any time, guys, depending on the current situation of the economy. You know, anything can happen tomorrow. Like, for example, back in 2020 when the pandemic hit, just before that pandemic crash, these numbers would have been different in comparison to, let's say, the day before the crash. Do you get what I'm saying? So anything can happen to affect these figures. But as of right now, the Fed is expected to remain paused at 5.5%. Now, I touched on why March could be significant, yeah? And March could be significant because the market makers are betting that the Federal Reserve will cut rates by 25 basis points to essentially cut rates for the first time ever since hiking them. So what does that mean? What does that mean for the charts? So what we can do is we can go to March right here, yeah? So the exact date is when? The 20th of March. So we can go into the third week of March and mark it. If we go to here, right here. And it's quite funny because that is almost in line with the next Bitcoin halving, which is expected in the first week of April, which is crazy. Now, if you watched my last video, you would have understood the two narratives that could take us to that short-term top. It's either one of them two that will take us there. It's either the Bitcoin spot ETF or the halving. Now, with regards to the Bitcoin spot ETF, if you're sitting in the camp of believing we hit 48k now, you must also believe that we go higher by the time the Fed cuts rates for the first time. However, if you're in the camp of we have now actually topped, we're going to take a little dip, and then we will get to 48k by the time the Fed cuts rates for the first time, then you believe that is the short-term top, yeah? There's a difference. So we could mark out that this elusive 48k level that we've always been eyeing on, that everyone is specifically talking about, this means that we still have more leg room to grow by the time this first rate cut occurs. As I mentioned before, it doesn't have to play out exactly the same, as we only have one data point, which is why we're going to look at the S&P 500. Now, you can see in the S&P 500, it's been around for quite some time now. A lot longer than we've probably lived on this planet, certainly for me, that's for sure. If we look at the Fed funds rate in over the last, 50 years or so, 40 years or so, you can see that the interest rates are kind of messed up. So I'm only going to take data from the year 2000 onwards because that's where it looks a bit cleaner. We can analyze the data a bit more. So with regards to the S&P, and remember the S&P has somewhat of a positive correlation with Bitcoin because they are both risk-on assets. You can see with the S&P back in 2000, October 2000, the Fed cut rates for the first time, but the S&P peaked just before. You can see right here, so they cut in October 2000, but the S&P peaked in April of 99. The next first rate cut, you can see that the Fed cut rates for the first time in August of 2007, but the market didn't actually peak until October, yeah? Fast forward, again, back in June of 2019, you can see that the Fed cut rates for the first time in June of 2019, but the market didn't peak up until December of that year. So we have three data points right there. Two data points that suggest that when the Fed cuts rates for the first time, the S&P went on to put a higher high in the future. We only have 1 point of data entry where the Fed cut rate for the first time and the market's peaked just before. So it's 2 versus 1 right now. But all I can say is that when the Fed cuts rates for the first time, you know that the top has either just been put in or is going to put in a slightly higher high. There's a small range there, but the main thesis is that when the Fed cuts rates for the first time, it is not good news for risk on assets. Do you get what I mean? So even regardless if the markets have put in a top just before rate cuts or just after rate cuts generally mean a bad thing for markets, because it means that the economy is weak, the economy is broken, and that the government, the Federal Reserve, need to turn the printer on again to fix the economy. Otherwise, it's just going to collapse on itself. That is why the market's correct, guys. So hopefully that is clear. If we go back to Bitcoin, we can also see that when the Fed cut rates for the first time back in June of 2019, Bitcoin then went on a downtrend for a good 8 months or so. Yeah, and that is where opportunity lies. When the Fed cuts rates and they drop them down to zero, that is where the opportunity lies. That is when you should invest your money for the upcoming bull run that may arise after the Fed starts to print money again. Hopefully this video was educational to you. If you liked it, please leave a like. Please hit that subscribe button. Again, I'll put a link in the description down below if you want to shop some cryptocurrency products. If you do, however, want to learn about macroeconomics, I actually created a cryptocurrency A to Z 101 course. That is my Bible, guys. I literally spent a whole year creating that, putting so many data points in there. I can actually show you a screenshot right now of the details that actually are entailed within this course. You can see there's so many chapters. There's around 12 chapters. You got macroeconomics, you got NFTs, you got fundamentals, you got trading, you got market psychology, all of that good stuff, how to find hidden gems. That's what we want in bull markets, don't we? So if that sounds good to you, it's only £30 right now, currently on sale. Go ahead and buy it. So that's it from me today, guys. I hope you all enjoyed the video, and I'll see you next time. Thank you. Bye.